Right now on RealAgriculture.com, we're joined by Moe Agostino from Farms.com. Welcome today, Moe.
Thank you.
Moe, we're going to look at soybeans. They've definitely been a good news story on a real price appreciation run. Have pulled back recently, though. What can we expect going forward in the soybean story?
Well, you're right. After peaking, we'll just talk January 2011 soybean futures because the November's off the board. But after peaking at about 1348.5 on November 12th, which was just shortly after that USDA crop production report on November 9th, we seemed to somebody rang a bell at the top and said it's time to take some profits and go the other way, and we fell as low as about 11.75 and a quarter on this particular contract. So a good, a good drop there. It's probably down about, that 14 to 16% within a very short period of time. It lasted for about 4 days. Since then, we've kind of gone sideways, and lately, though, the last few days, we've seen the market bounce off of the lows somewhere in that $12 range. $12 per bushel range, and we just before the U.S. Thanksgiving holiday today, the market closed at $12.55. So a nice showing the last couple of days. Obviously, the correction that ensued since that USDA crop production report was largely due to headline news about Irish debt woes and, more importantly, Chinese inflation and demand fears. And so I think the funds took that as an excuse to take some profits and sell some grain contracts. Not only grain, but really just commodities in general. So I think the bears won for now up to that Thanksgiving U.S. holiday. But I think there might be a Santa Claus rally in the making. What do I mean by that? Well, the North American fundamentals still remain quite strong. In other words, ending stocks are tight. Export demand is quite strong. In fact, just the other day, USDA announced 780,000 metric tons being sold to China for 10/11. I've been watching the daily export numbers from USDA, and they're typically 100, 150, 200, 300, but 780, someone has to wonder whether China is playing their usual game by, talking their talk and sending prices lower, and then all of a sudden turning around and buying some cheaper U.S. beans. Look, the other day, they've got local supply problem. Beans, corn, cotton, sugar, diesel, aluminum have gone through the roof because demand is so high. In some cases, corn prices have achieved $9.25 locally per bushel. So they're going to continually have to import more corn and beans to keep that to keep feeding that demand. If they raise rates and do other measures to slow down that demand, that's fine. But that's just a short-term measure, not a long-term measure. So long-term, I think till year-end, I think we can get this market to bounce back. I think some experts think that U.S. ending stocks number in the States, they're saying that there's ample supplies, but I don't think it's based on my export projections. Demand is as much as 20% stronger so far this year compared to last year. And so I think those ending stocks are going to be even lower through the next crop production report through December. Now we're getting concerns in the last couple of days about an Argentine drought. Brazil's been dry. Now Argentina's very dry, and that's causing concern, particularly for Argentina, where they tend to grow a little bit more corn. And so the last few days, you've seen corn take the lead and beans following along. So I think we could end up seeing, with the problems in China, with the problems that we're having in Argentina and Brazil, and very tight stocks in North America, strong demand, I think all that points to higher prices again for soybeans for a year-end rally.
So do soybeans have to go higher in order to kind of combat this, acre war with corn?
Yes, you know what? I think that battle for acres next year is almost impossible. Many think that we're going to need about 7 to 10 million acres. We had about 4 million acres go bid into the set-aside acreage program in the United States. About 2 million have come out of that. But 2 million will usually going into beans the first year. Informa thinks we're going to plant about 93 million acres next year in corn and about 75.8 million in beans. That would be a drop of 1.6 million from this year's total. If I factor in a 44, 45 yield with some pretty strong demand, pretty well where it is today, maybe a slight bit higher, we see ending stocks actually dropping to zero. In theory, you're never going to see the USDA print zero. Most likely beans are going to have to go higher in order to ration that demand. So if we can get past January's USDA's quarterly grain stocks report and the January crop production report with no surprises, I think the spring that from January through March is going to see a battle for acres, and beans are not going to just sit here and let corn take them. I think they're going to have to go higher to ration that and buy those acres.
What's the reason for the strong demand in soybeans, Mo?
Well, it's largely coming from China because a lot of farmers don't know this, but they've got they love eating pork as a consumer. They're the largest pork producer in the world at 1.06 billion hogs, and they have to feed that hog herd with corn and meal and so on and so forth. I mean, they use beans for other purposes too, but that is one of the big reasons why they continually just keep buying those beans. It's either through, depending on where that U.S. dollar is, it's either through the U.S. or it's through Argentina and Brazil. So, since 2000, grain exports have ballooned from 1 billion to 15 billion in the United States, and I think that's going to continue going forward. As long as that Chinese market continues to grow at 8 to 10%, the global economy chugs along around that 3 to 4%, it's good news for soybeans.
Okay, Mo, thanks a lot. We'll talk to you again soon.
You're welcome. Take care.